Good time then to introduce the two experts who are going to be with us over the next 30 minutes. We have Gaurang Shah, Vice President at GRG's BNP Paribas. He's going to be talking to us about all the fundamental aspects of your questions and to get all the chart checks and technical analysis done. We've got Rahul, Chief Technical Analyst at Edelweiss Securities. Gentlemen, great to have you both with us. Let's focus in on the first question for the day. Comes in on M&M Financial Services and has been sent in by Raj Kumar.
I am having M&M Financial in my portfolio. I bought it at the rate of 275 and I'm having 270 shares of that. So I want to know that whether I should hold that stock for a long-term perspective.
Okay, let's help Raj out and find out what exactly he should be doing with his holding in M&M Finance. And given that the current market price is at 258, he's losing out about 4,000 rupees. Now, given the fundamental factors in terms of the earnings, it's not been the most encouraging quarters. In fact, it's been the Q1 profits came lower by about 19% for the quarter gone by. Close to 155 crores is what they clocked in. And the higher finance cost is really what dented the profit growth. Along with that, you had the increased write-offs on loans, and that really put pressure this time around. But all in all, it does seem to be a fundamentally sound stock. So, Gaurang, let's get in your views. He's gotten at a little bit of a higher level, but what would your advice be right now? And do you think that he should stay put?
Well, I feel he should definitely stay put. Yes, I mean, he has gotten at a little bit higher level, but if he's got investable amount, then he can possibly add 50 or 100 shares at current levels. Thereby, his cost will come down. But given the kind of pedigree that the company comes from, M&M Group, I'm quite optimistic that the loan book is likely to grow with the pickup in the auto segment, especially on the tractor side, agri-equipment side. And there is also a trigger about the interest rates coming down. Now, both these factors should augur well. I won't say that it will turn around in a quarter or two. I guess it will at least need 2 or 3 quarters for a turnaround to happen. And he is a long-term investor. My advice to him will be hold on to it. If he's got investable amount, 50 or 100 shares, he can average over here. With a 1 year plus time horizon, I think you can look for a target about 335. There was a disappointment and the stock got sold out when the numbers were out this time around. But I don't think that kind of negativity is going to slip over to many more quarters to come. So I guess hold on to it.
All right. So, Raj, you heard at Gaurang, there are no worries as far as the pedigree of the stock is concerned. Yes, your entry price is a little stiff. So what you could do then to bring that down is to average at the current levels. What's your sense, Sahil, on the charts as well? Again, the entry price looks a bit, stiff. But nevertheless, do you think that he should stay put here? Because there's not that many quality names in the NBFC segment.
Yeah, I think since 2009 the stock is in an uptrend, and I think this uptrend will continue. In 2014 the trend has not been very fair for the stock, so I think that will continue to be a consolidation phase for a while. 225 to 230 seems to be a very important support, so I think he can add some positions with the stop loss within mind at 230, and I think the target should be much higher from current levels, and he should continue to hold this position.
That's the word of advice coming in on the technical side. So you can look to stay invested in this counter. In fact, Sahil's talking about a stop loss of 225 and 320 is the upside target. And even Gaurang highlighted quite a few of the fundamental factors, saying that it's prudent that